G'day folks, welcome back to another update for gold and silver. Now I'm pausing buying gold at the moment and silver because it looks like it's taking a bit of a retrace to the downside and we may turn bearish in the near term. So we're going to include some back testing as well, and also hit that like and subscribe button to support the channel and reference the +1 videos for a deeper dive into the trading strategies we use today. In terms of the outlook, elevated global debt loads, persistent inflation risk and expectations of interest rate cuts, especially by the Federal Reserve, are underpinning precious metals. Safe haven demand has been triggered by trade tensions, example China and the US, geopolitical flashpoints and systematic risk concerns, example shutdown, supply chain disruption. On the flip side, signs of easing tensions or optimism, for example a possible US-China trade deal or de-escalation in certain hotspots, may reduce the urgency for safe haven assets, potentially pressuring gold and silver. Industrial demand remains a tailwind for silver, clean energy, EVs, solar, adding a distinct geopolitical structural layer beyond pure hedging. So starting with gold, we'll look at the weekly chart first. You can see here it's been a nice big bull run since pretty much the start of 2024, although we've had a couple of retraces and currently we're in another retrace at the moment. Now notice here we had a couple of bearish divergence. The first one was here, it came down, hit our target, and a second longer term bearish divergence is still in play, and we've drawn a target range there, and that target range is drawn with a Fibonacci retrace from that high down to that significant low. You can see there it's just between a 23 and 38% range, which also coincides with this moving average range. So that's a minimum target range we expect if it continues on a downside. Of course it could go a lot further, or it could just touch it and bounce off that. So at the moment, a bit of a bearish momentum at the moment on gold. Now, if we look at the daily chart, this has already broken through the moving averages of both the price and the CCIs. And again, you'll notice we did have a pretty much almost a double top there on the CCI versus higher highs on the price, and that actually pulled back. I haven't drawn the trend lines there, but you can see there it's with that little, we had a little bearish divergence there. Lower highs on the CCI versus pretty much almost a triple or 4 period tops on the price, and it's actually broken down into our target range and broken below that as well. It's currently actually sitting on the bottom of that 38% retrace level. And during this period you would have been going long. Obviously we're going in the direction of the higher time frame if you're trading on the 1 hour time period. And on the 1 hour, looking at that for a moment, this gives you a bit more divergence, in this case mainly bearish divergence. You can see there I've marked it with these trend lines, and each of those have been hit with those little rectangles indicating where the 2338% Fibonacci retrace is. This one here has gone well beyond the 2338 and looks like it's approaching the 100% retrace level. So if I was to draw a Fibonacci in that range, you can see it's broken through the 2338, past the 61% and approaching the 100% retrace level. Notice also on the 1 hour chart, the CCI is still dropping and so is the price. So you may well see it break down into that 100% range. I'll show you a couple of back tests now. This is the long positions going back from here around about the 22nd of August this year. And you would have taken long trades as long as the price and the CCIs are in an uptrend. And looking out for any bearish divergence, and I've tried to mark a few of them here with these trend lines. And you would have closed out, for example, some of these periods when the moving average bends down on the price as well as the CCI. You would have closed out your position there, and that would have saved you that little drawdown there. Going long again when both are in an upswing, close it out when they're both in a decline. Going long again there, closing it out, and so on. Up until where we are at the moment, again we've had that double top up there on this is the 1 hour chart versus declining highs on the CCI, and it's dropped off, and you would have closed it out the very latest at that point there when both price and CCI moving averages started turning down. Now, since then, you'd be going short, and these are the short positions. So again, in this case, it's a bit of a trickier one because the price and the CCI are starting to curve up. So you would have closed out at that point there with a small gain, avoided that long trade, and going short again during that period there. The back test here just runs through the whole period, doesn't discriminate between ups and downs on the moving averages. So you would have taken short positions from there again. Both the CCI and the price are in a downtrend. You might have got out with a small gain or even a small loss on that one, and then going short again at that point there. And in this case, you'd be closing it out as soon as you see the price break into the moving average range Or if you want to be really cautious, you close it out when the CCI breaks into it. So you would have got out near the bottom there. Here's what I normally do to maximize the returns and wait for another break to the downside. So when the CCI breaks to the downside again, you enter another short position. So silver's pretty much performing in the same manner as gold, and here is the weekly chart for silver. Again, you can see there the price is pulling back towards a moving average, although the CCI has already broken into that range. And we drew this very long-term bearish divergence versus the price. I haven't drawn a target for this, and I'll do that now. So as a retrace, we can expect a minimum pullback. We'll take it back to that level there. We can expect a minimum pullback to that 23.38%, and you can see there it's just touched it, and that could be all it needs before it possibly bounces. But at the moment, it looks like it's going to break further to the downside, and we'll look at the smaller time frames as well to show what it's doing. Let's go to the daily chart. That's already broken below the moving averages in a bit of a downtrend at the moment, and you would have gone long from that period there. You would have gone long another period here, but again, closing it out whenever it breaks below on the moving averages on the price and the CCI. So at the moment, you'd be probably taking short trades at the moment based on the daily if you're trading on the 1 hour time period. And looking at the 1 hour, again, you can see there more closely the ups and downs of those moving averages. So in this case, you'd be going long in accordance with the daily trend whenever those are trending up, and closing it out when they start bending down. Long, closing it out, long, and so on. And then also paying attention and respecting these bearish divergences whenever they happen, and you would have got out at the very latest at that point there when it broke below the moving averages on both the price and the CCI. Now, in terms of the back test, let's look at the long positions first, going long from this period around the 28th of August. Again, following that moving average momentum, going long when they're in an uptrend, and closing it out when they start bending down. And then more closely, you would have got out somewhere here when both the price and the CCI broke to the downside, and you would have avoided that drawdown had you closed out your long positions based on the daily and your 1 hour time frame. And then looking at the short positions, so switching now to short, you would have taken short positions when the price and the moving average of the CCI broke to the downside, and that's indicated here. Again, watching it very closely. Now, this was a bit of a consolidation on the 1 hour period. You can see the moving averages are very tight. I like to see them break apart and widen as I did back here to be a bit more confidence. And it's doing it here a bit better, breaking to the downside a bit more confidently. But again, notice the CCI has broken into that range there. So that would have given you a small little gain that you got out of it, and waiting for another break to the downside. If you'd like some share trading ideas, why not subscribe to the Patreon page where we look at weekly bullish shares, scans run and shared with our Patreon members. And here are some of the trades we've taken since around about the 21st of September this year. A handful of shares there, and they've returned 9.65% so far. We've got a couple of holdings, but they haven't closed yet, so that's why that's still static at that percentage return so far in about a month. So links to the Patreon page are in the description below, so click on the links below. Thanks for watching, hit that like and subscribe button, and we'll see you in our next update.